Bitcoin is dead. Again. As we dump back to the February lows, the obituaries are back. The grave dancing is back. You can feel it in the air. People are done. And this time, the story has a face it never had before. Artificial intelligence. The hottest trade in a generation. A hot ball of money sprinting out of everything and into the AI machine. And Bitcoin's just sitting there bleeding while the future gets built somewhere else. So today I ask what everyone's thinking. Is AI finally the thing that kills Bitcoin for real this time? And it turns out it's not just Bitcoin in the crosshairs, because the same force draining Bitcoin might be quietly tearing the foundation out from under the dollar itself. This is Truth Block. I'm Hurley. Let's mine truth. Now, before we dive in today, I just want to let you know that we're building something really exciting at Simply Bitcoin that you won't want to miss. Scan the QR code below or visit news.simplybitcoin.com/launch to learn more and be one of the first to see what's coming. All right, let's start with the pain because it's real. If you're holding right now, this hurts in a way that the last few dips didn't. My 6+ years in Bitcoin and I've never seen sentiment this bad. And here's the part that really stings. Every other bear market had a clear catalyst or villain. This time, nothing broke. The network's fine. The fundamentals are fine. The damage almost feels internal. And although it may seem like it, not everything is mooning. Gold and silver, for example, have gone sideways for months. The real story, the salt in the wound, is the stock market and the AI trade. That's the party Bitcoin didn't get invited to. So if you feel like you backed the wrong horse the moment the future showed up somewhere else, I get it. But feelings aren't a thesis. So let's look at where the money actually went. The scale is staggering. Pierre Rochard pointed out that the AI boom added $19 trillion of new market cap to the top 50 companies over the last year, about 13 times Bitcoin's entire market cap. That's one CapEx cycle vacuuming up nearly all the liquidity on Earth. And the IPOs are lined up behind it. SpaceX, OpenAI, Anthropic, the biggest debuts in history, all looking to happen this year, all with insanely bloated valuations. So smart money raises cash. Jeff Park called it the hot ball of money trade. And some of that cash comes straight out of Bitcoin. Saylor said it plainly this morning. This is a capital rotation, not a Bitcoin impairment. So let me concede the bear's point. Bitcoin is being outcompeted for speculative dollars right now. That's not FUD. That's true. Jeff Booth, who lived through the Dotcom bust running an internet company, framed where he sees this going.
But if you were measuring in pieces of paper, then you would be in every other hype cycle around, and you'd be comparing to measure Bitcoin to every other hype cycle and things that are going to blow up, cascade enormously bad, right? You'd be paying at the top for SpaceX IPO. And these things are actually probably going to trade down in a meaningful way as the unlock comes in and people can sell their shares. So there'll be a hold period. So these things have to get out. OpenAI has to get out, and the money that they're lighting on fire to be able to build these businesses is no sense to be able to pay that back. So some of these are going to collapse to the real market later on, and a whole bunch of people that ported from Bitcoin to these things are going to find the money that they thought was going to grow is going to disappear because it's all inside this kind of bubble of more and more manipulated money, whereas Bitcoin is that thing outside of that system. And it reminds me, by the way, because I was early in the internet, had a business in the internet in 1999, 2000, when Amazon dropped from $126 to $3, right? And our company almost failed. It was brutal, right? And I remember going and trying to raise capital, and everybody was saying the internet's dead. And while you're watching adoption go straight up to the right, well, people got liquidated by overbidding things that didn't make sense. So I think the same thing is happening right now, and that means if you're holding Bitcoin in self-custody and you're going to do exceptional. I don't know when the port comes back into this and out of the other things that Samson was talking about, but it is going to happen.
The people porting out of Bitcoin are running into assets priced in the exact money being debased to fund the mania. The story and the truth pointed in opposite directions. And hold that thought because the same fork is opening right now. Here's the question Truth Block always comes back to. If you believe Bitcoin is the best long-term money on the planet, does your behavior match? Because if you sell every time you need cash, you don't really believe it. And every sale hands the system a tax event on your way out the door. I use Ledden for this, and I'll tell you straight, I'm a happy customer. Ledden lets you borrow dollars against your Bitcoin without selling a single sat. Ledden has had over $11 billion in loans funded since 2018. They've had 10 straight proof of reserve audits verified by a real CPA firm. They came through the 2022 bear market, the year everyone else rugged their customers, with 0 customer Bitcoin lost. Your coins are ring-fenced, never lent out, never rehypothecated. Fiat in your account, no capital gains hit, at about half the rate of a credit card. That's what staying sovereign looks like in practice. So start today at learn.ledden.io/simply. Because not being a forced seller is the whole game. And to see why, you have to look at what AI is actually doing underneath the price. Everyone's stuck on the same question. Is AI a bubble? Bulls see real productivity. Bears see insane spending with no returns. And here's what nobody says. They're both right. They're measuring opposite sides of the same animal. There's a semi-analysis piece by Dylan Patel and Malcolm Spitter that reframes it. They call it dark output. Real economic value the official numbers literally can't see. The cleanest example is a legal document that cost $400 30 years ago, costs about 50 cents now with AI. To you, that's a miracle. To the people measuring the economy, $400 just vanished. GDP reads it as a decline, not as a boom. Jordy Visser sees the same thing in the data on his latest interview with Marty Bent on TFTC.
The entire economy right now, and I'll say in the US because it is dominated by the US, is AI right now. And yes, I understand that consumption is almost 2/3 of GDP, but for consumption to grow at a time when we're not seeing any job creation whatsoever, historically, if you had no job creation, you would assume that if there's no job creation, there's no GDP. That's historically the relationship that normally would occur. What is happening is we're obviously having a massive build out, which is contributing to nominal GDP. But the AI side is allowing profit margins to grow. And whether it's purely AI, the accounting benefits that come to CapEx versus taking the revenue up front, it doesn't really matter to me. It's driving stocks higher, and stocks are such a big portion of the economy that you can't not say that a 10% move in stocks, which is equivalent to over $6 trillion of net worth created in the stock market, of which let's assume 70% of the stocks are owned by Americans, including pension funds. I keep hearing this myth that most Americans do not own stocks. So you guys know that is a complete lie. 2/3 of Americans own stocks either directly or through pension funds. And then 1/3 of Americans receive transfer payments from the government. So you can see how this is kind of like UBI. If stock market's going higher, a lot of people are benefiting. And at the same time, the transfer payments are still there and growing every year, filling in probably another 25 to 30%, even though it's 33. Some of those are also getting pension funds. So regardless, the majority of Americans benefit from the stock market going higher, no matter what.
So if the value's real but invisible, 3 things follow, and each one eats fiat alive. The bears yelling bubble are staring at the cost side while the output hides. The Fed is steering with gauges that no longer read reality. Kevin Warsh, the incoming Fed chair, openly says that data is backward looking and that you'll always be late trusting it. And the tax base, wages, transactions, and receipts, they shrink while real activity grows. So the funding hole widens and the only tool left is the printer. So there it is. The thing that looks like Bitcoin's assassin is dissolving the foundation fiat stands on. Assassin to accelerant. Now let's strip AI out and look at the shape of this thing. Every cycle had its "this time is different" villain. Mt. Gox, FTX, and every time the script ran the same. Capitulation, obituaries, grave dancing, silence, and then recovery. This time the villain just wears an AI costume. In 2024, fear and greed called these price levels extreme greed. In 2026, that same number reads extreme fear. The price didn't change the mood, the story changed. Now I have to own something. I was loud about the 4-year cycle being dead. I argued the halving's effects had faded and we'd broken the pattern. And honestly, I'm definitely stunned to see it play out almost exactly on schedule. Same drawdown shape, same timing, despair right on cue. I'll say it plainly. Clearly I was wrong. The 4-year cycle looks to be intact. What gets me most is that every one of these cycles had totally different inputs. Different macro, players, different catalysts, and they've still rhymed so closely, it's eerie. And just like this cycle gave us a muted bull market and no blow off top, the bear's been muted too. We're only down about 50% from the highs. The old Bitcoin bear markets took you down 70, 80, and 90+%. So here's my personal read, And to be clear, this is just my opinion and my gut feeling, not investment or trading advice. I think we grind around here for a while, and it wouldn't shock me if we revisit the 50s. The 200-week moving average, which has marked basically every bottom, is sitting right around $61.7 thousand. To me, this has stopped being a price thing and has become a time thing. Could an AI unwind take us lower? Sure, but I think we've mostly front-run that. To me, these levels feel like the 16 to 22,000 zone in 2022, and I wish I bought more in that price range, don't you? So I was wrong on the timing, as I think a lot of people were, but I'm not wrong on the fundamentals or the long-term trend. That's the difference between a call and a conviction. And while everyone watches the funeral, look at what's quietly happening at the level that matters. Mark Moss nailed what Bitcoin is right now. Not broken, not manipulated. It's being correctly repriced as exactly what it is. A long-duration savings asset. A hedge against uncertainty. And here's the uncomfortable part. As long as AI is the most certain bet on Earth, soaking up the next decade of capital, Bitcoin will stay in hibernation. That's what a long-term store of value does when there's a hot, productive boom screaming for every dollar. But that's its whole nature. Always the underdog in the background, written off, waiting. And then it rises from the ashes and shocks everyone. Underneath the noise, the bedrock is being poured. Listen to the U.S. Treasury Secretary asked point blank about the strategic Bitcoin reserve just this week.
But I do want to ask you a question, Mr. Secretary. As you know, economic security is national security. And the Treasury Department plays a critical role in the United States national security apparatus. With the emergence of digital assets, I was curious if you could touch on the Treasury's role in fulfilling President Trump's executive order that set up the Bitcoin Strategic Reserve and digital asset stockpile. Could you give me an update on where things stand with the implementation of the executive order?
Yes, sir. And I couldn't agree more with you that economic security is national security. I gave a speech at the Reagan Library outlining my thoughts on that and how for 25 years the U.S. has been asleep. And under President Trump's leadership, we are moving forward very quickly on that. And part of that is our digital assets initiative. The Strategic Bitcoin Reserve is something, this is new technology, this is new ground. We are proceeding with all deliberate speed, and we are making sure that as we are doing this, in this complicated process, that we use best practices and things will be durable for the future. And I look forward to working with you and your team on that.
Absolutely.
And I look forward to the Clarity Act being passed this summer.
So while retail sells the bottom to chase IPOs, the US government is calmly building a national Bitcoin position and tying it to national security in the same breath. Like Moss said, it's easy to post buy the dip, but infinitely harder to do it. But when the government tells you they're building a reserve that becomes the bedrock of the new global monetary system, and you can still buy a coin for $60,000, that's the signal hiding in plain sight. The gates are opening slowly enough that nobody notices they're open. And if the base layer is being built at the level of nations, the only question that matters for you is whether you're standing on it or just renting exposure to it. And that's where the Bitcoin way comes in. How do you secure your Bitcoin properly? How do you protect it from theft, from exchanges, and from your own mistakes? What happens to your Bitcoin if something happens to you? And how does your family get it? The Bitcoin way sits down with you one-on-one and walks through your full custody setup until it's right. So grab a free consultation with the experts at thebitcoinway.com/Hurley. Okay, let's bring this one home. The people porting out aren't even wrong about AI. It probably does absorb the next decade of capital. And that's exactly why Bitcoin looks dead. But here's what they miss. AI isn't Bitcoin's competitor. It's building, brick by brick, the exact monetary disorder Bitcoin was made to answer. A hedge against uncertainty looks useless right up until the certainty cracks. And it always cracks. Sound money doesn't win by votes or treaties or by a green candle. It wins by gravity. Right now, as the fast money is chasing the hottest horse in the race, the base layer is being poured underneath all of it, quarter by quarter, coin by coin, at the level of nations. One of those is noise, and the other thing is the floor the whole thing eventually has to stand on. Here's investor Mike Alfred talking to the Bitcoin historian Pete Rizzo on what happens to people during every one of these drawdowns.
You posted a provocative question on X. You asked Instead of asking what the thesis for $1 million Bitcoin should be, people should be asking what's going to stop Bitcoin from hitting $1 million. The question to you, what's going to stop Bitcoin from hitting $1 million?
I don't think anything could stop it. That's kind of why I posted it. I was out for a run. I was thinking about this. I think a lot of people spend a lot of time trying to figure out why Bitcoin won't work. I think more people should be spending time thinking about how it will work. And specifically, the point of that was to call out the fact that there really aren't too many things that can stop Bitcoin, right? Recently, I think on our last chat, we talked about quantum a little bit, and that's one of the hot things for people to say would stop it. My personal view is really nothing in the long run can stop a truly decentralized protocol. And the thing that fascinates me the most over the last couple months, and this has happened many times over the last 2, 3, 4 years, but anytime there's like a macro drawdown or like a geopolitical event like we've seen with Iran, it's like everybody forgets the fundamentals of Bitcoin, right? So like if you learn to play basketball, you learn how to dribble and pass and shoot. You learn the fundamentals first, right? If you learn to play soccer, you learn to develop your touch and to volley and to header and do all the skills you need to do in order to be successful. In Bitcoin, you start by learning how the protocol works, right? Why it functions the way it does, why it's sort of anti-fragile. But for whatever reason, I don't know if it's just like brain damage or viral brain damage that happens on X. Every time there's a minor drawdown, it's like everybody forgets the fundamentals. So the question is really, if nothing can stop it, why wouldn't you just assume that it's going to go to 1 million? Why spend so much time thinking that you have to figure out the thesis for why it goes there? Why not see if you can find reasons why it won't? And I just don't see very many that are credible.
Every single drawdown, people seem to forget the fundamentals. And they forget because they borrowed their conviction in the first place. They get it from a rising price, a podcaster, a green scoreboard. So when it turns red, the conviction evaporates and they sell the exact bottom they should be buying. Don't be that person. Don't run on someone else's belief. Do the work yourself. Build your own conviction from the ground up, because it's the only kind that survives a day like today. And if you don't, I promise you'll get shaken out and exit right before the part you waited years for. Remember, we're not here for a trade. We're here for the base layer. So, 3 questions for you. Have you read this exact obituary before, or do you really think AI makes it different this time? And be honest, somewhere in this drawdown, did you start forgetting the fundamentals? And what's your conviction level right now between 1 and 10? And is it yours, or did you borrow it? Drop it in the comments, and if this connected, like it and share it with someone who thinks AI just killed Bitcoin. And don't forget to subscribe to Simply Bitcoin so you don't miss what's coming. This is Hurley signing off. Go touch grass this weekend and talk with other humans, and I'll catch you on Monday.